turn our attention to the world of commercial real estate and welcome in our next guest. Warren Waschsberger is with us, CEO of ACOM Capital. And I'm so glad you're here because we've seen some of these commercial real estate names really jumping in the past few days. There was a sale done by SL Green. Some of it is short covering, right? I mean, you have to call it out the way it is. What's the opportunity that we can find in commercial real estate? Where do you see opportunity, or is it a lot of bad news?
Hey, Nicole, how are you? Firstly, always good to follow Eli Manning. I'm sure that's an exciting part of your day. So that was awesome.
It certainly was. Thank you. Nice of you to acknowledge it. Thanks.
It was pretty great. Listen, I think commercial real estate is really a tale of two cities. I think you can't mistake pockets of distress for a throwing out the baby with the bathwater. Office, as we know, despite the SL Green sale, is in its early innings. There's still significant stress yet to come. But when you look at housing, multifamily in particular, still the average multifamily house is $699 less median monthly home payment than buying a home. So that's still pushing the demand in multifamily. And we're seeing still significant demand in multifamily and industrial. So I think those opportunities remain, but we're going to be going through some speed bumps ahead.
Right, understood. So at this point now, there are bright spots like multifamily, for example. What about malls? People always said go to things that had senior care or medical buildings, multifamilies. Some of the office REITs were really under more pressure. Malls had been under some pressure. Can you continue to break it down for us? Anything else that we should be focusing on there?
Yeah, so I think industrial still is great. You're still seeing significant onshoring happening kind of in a post-COVID environment where you had people just in time is really moving to where companies are increasing the amount of inventory they have. And as a result of increasing the amount of inventory they have, they are leasing more industrial space in order to meet the demand. Medical office is still a great place to be in. It's not necessarily susceptible to cycles as some of the other categories are, because unfortunately people still get sick whether the stock market's up or down, and so as a result of that, medical is still a great place. And then you briefly mentioned malls. I wouldn't say we are overly bullish on retail, but retail is one of the places where you have had negative net absorption over the past 5-10 years, where malls and retail has been closing. And so as a result of that supply has come down. And as a result of that supply coming down, you're seeing great results in the best regional mega malls, the Century Cities in Los Angeles, Westfield's project. And so I think that there are bright spots, but interest rates increases certainly don't help.
Right. So at this point now, you have an environment where, we can say these are higher interest rates, and a lot of these commercial real estate companies have to refinance debt. It comes up, it comes due, and it's going to be at a higher cost. You had a lot of smaller banks that had a lot of exposure to commercial real estate. But at this point now, would you still call this a high rate environment? And the Fed is likely to keep raising rates. Where does that fit into the big picture for investors who are interested in investing in commercial real estate?
I think that's right. I think the Fed is likely to keep raising rates. And as a result, I think people are starting to price that into their underwriting. What I think people are trying to understand is, when is there going to be an equilibrium? So if rates are going to continue to go up, when are they going to level off? And you're going to start to see more transactions happening. Right now, there is a bid-ask spread between buyers and sellers. And that's primarily due to the fact that interest rates are in a continual movement, and people can't underwrite what does their debt look like. So will there always be opportunities to deliver alpha? Yes. Do I think that it makes it more difficult to generate the returns people were generating over the last cycle, sort of pre-rate shock? For sure. But we're going to see in some of the CMBS more short-term bank debt market, you are going to see this wall of maturities coming, and people are going to really have to figure out how are they going to refinance these properties in this higher interest rate environment.
Right, understood. Warren Waschsberger, thank you so much. Really appreciate your insight here on this group. Yeah, Warren Waschsberger, CEO of ACOM Capital.